Jay Bala now joins us on a phone line, Chief Market Technician at catchthechaos.com from London. Jay, you are the place where everybody really, wants everybody has their eye on in London. What is the sense that you're getting, looking at the GBP, looking at what's happening in the global currency market? Where do you think things are going?
Yeah, it's going to be a photo finish. It could go either way, but it's a very close call. But, as far as the currency market is concerned, the GBP was anyway bound to get here where it was meant to come. See, we wrote a piece in 2013, around April 2013, and said the pound was set to go below the 2008 low of 1.35. The market brought the pound to 1.38. So, you should question, would market have anyway got there if the Brexit question had not come up? So that's the thing. We always focus on the larger trend. The market will anyway do what it's meant to do. All these intervening events are going to, at best, bring knee-jerk reactions. It's the major trend that governs the market, and that major trend is governed by social mood.
Right. How would you look at the GBP from here on? Say what level, if it breaks down, then you think it will be in a bearish zone, or above what it will be in a bullish zone, say if there is a gap down or a gap up tomorrow?
See, when the opinion polls came out that the out camp is leading, the GBP hit a low of about 1.38, and it's recovering from there and seeing a counter-trend rally. I would see this as a counter-trend rally. This could last at best for a week and not beyond that. The pound is set to weaken, and it's, as I said earlier in 2013, I hold the same view. The pound is set to break the 2008 low from a medium to long-term perspective, not from the short-term perspective. So so it's going to be so you can interpret it anyway. If the pound is going to go down, you can interpret it anyway from a political scenario. But we see the current rise and strengthening process for the pound as a short-term move rather than anything long-term.
Right. How would you look at the dollar index? What will happen to dollar index, say if there is a sharp risk-off?
Yeah, this is the final leg in the dollar index correction, which is to the downside. But the dollar index has definitely got one more leg up, which will take it to record 52-week highs. It's going to cross the 100 mark over the next, somewhere in the region of 6 months time frame. So we're going to see the dollar strengthen from here on. But what happens in the short term, it's going to be a bit more volatile. But I don't see much weakness for the dollar index beyond 93, 92 mark. So at best, it's going to weaken to 92, nothing beyond that. So we're going to see the dollar index resume its uptrend from a very short term perspective.
Right. As far as the Indian markets are concerned, 8250. Brexit, no Brexit, do you think markets will just have a 1 or 2 days reaction and then the bull run would continue?
Yeah, from a different perspective, I would like to see a Brexit so that the market presents a buying opportunity, and I don't think very few people have made use of the market's turnaround. The strength in the Indian market is standing out. It's a pillar of strength, and any fall is a welcome opportunity to buy. So from that sense, a Brexit would be positive if that's going to bring down the market lower. But anyway, the resistance are placed somewhere close to 84.50 rather than 82.50. The market is facing some resistance here, but anyway, the market is bound for some short-term relief rather than strengthening. But we're going to see the uptrend continue. The major trend is up. From a 6 months plus time frame, we're going to see the market take out 8,600, 8,700. So, whatever happens in the short term is going to be immaterial. If it falls, grab the opportunity with both hands.
Right. The thing that you pointed out about, markets, and if there is a Brexit and market were to fall, you would use it as a buying opportunity. Similar was the case with the news over weekend about the RBI governor. There was a gap down opening, and then essentially we had a big recovery coming in.
Yeah, you should always try to feed the crowd. We had the Twitterati saying the rupee will weaken 3%, 4%, and the market will fall, have a big fall. But none of that happened. That's exactly what the market, the majority opinion needs to be faded, and that's exactly the case with Brexit too. If they say if the Brexit happens, the market is going to, the whole world is going to collapse. You should be ready to buy, because the market's always in the markets, money always flows from the majority, the minority. But it's easier spoken than done. At the midst of a crisis, trying to fade the market is a very difficult psychological task. So it needs a little bit of different mental makeup. But that's the strategy one must adopt.
Right. How would you look at Tata Motors from here on? Do you think Tata Motors at 490 itself is telling you that Brexit or no Brexit, the stock is going up?
Yeah, if you recall from our last conversation, I was positive on Tata Motors more than Eicher Motors, and I said it's going to cross 500 plus, and that's exactly what it's doing. And it's got to where it must get to, and the short to medium term strength is positive for Tata Motors. So unmindful of what happens for Brexit, the stock is still looking strong. But at this level of 490 odds, it's a bit higher risk reward is slightly lower. Not that the trend is fading, but it makes sense to give a lower allocation rather than the allocation you have made a couple of weeks ago.
Right. Last time around when you were here, you told that till 425, 430 you would be bullish, or beyond that level, which was way above that level. What is that level now that you would look at, beyond which you would not look to sell this stock?
So you don't actually sell. You just avoid buying because the trend is still strong. It's going up. But as I said, it's not sensible to we always focus on taking disproportionate amount of rewards to risk ratio. If the rewards are quite high, we need the rewards to be very skewed compared to the risk, and it's a subjective call. But once the stock crosses 525, 530, I think it'll start to look less and less attractive from making fresh allocation to that stock. So that will be my cutoff point. But you can still allocate to this counter, but the allocation has to be lower.
Right. The way GBP will move, Tata Motors will essentially move that way. Say if there were no Brexit, do you see a relief rally in the GBP despite the recent up move?
Yeah, the relief rally has already started. The market starts to look a bit ahead. So if you were to interpret the market's move, the market is trying to say that the Remain camp is trying to take a lead. So unmindful of what happens from Brexit vote, the GBP is already in a relief rally, and but this relief rally will be short-lived. But once this event is out of the way, the larger trend will take control, and the GBP will decline to record lows.
Right. How would you look at RCom? It's now at the day's high. It's up 5.5%. Last time
we spoke about telecom sector last time, and we said it needs to recover well from 1 or 2 weeks time frame. And we're seeing some positive signs in this sector. And RCom is needs to take out the key resistance around 52, 53 zone. Once it's able to do that, I think it will be a much more stronger move for the stock, and the base would have been established in a much more firmer fashion.
Right. What is the level that you said? 51?
52, 53.
Right. So 52, if it takes out, you would be positive on RCom going ahead.
Yes, that's right. If it were to take out that on a closing basis, we can be more comfortable. You can be sure that the base is firmer than it was a couple of weeks ago, and that's what we are looking forward to in this particular counter.
Right. How would you look at PNB? We got an upgrade coming in from Nomura today. Already, of course, from the lows of 70, it has done very well by giving a 50% return. But do you think PNB can do better from here on?
Yeah, PNB has seen a very meaningful reversal from the lows it saw in February, and the key point that it took out the level of 92 is important for the stock. But you need to watch what it does in the next couple of days, and it shouldn't drop below the key support at 79 in the next couple of weeks. If it were to hold up that, I think it will be positive for the stock. But I think it's made an important low around the 69.70 mark. I think we should see at least a major relief rally come through to the stock to at least 146 from a medium-term perspective.
Right. Jay, thank you so much for taking out time for us. Hope to see you again quite soon.